One big problem I've noticed a lot of traders face in the market is the ability to trust in their setups. Yeah, I know normally it's quite difficult to trust in your setup, mostly when you are just getting started with trading. The reason is that you just learned something and you want to trade with your real money, and definitely based on how the system is, you definitely be afraid of losing your money. So this one actually led to the fear that a lot of people have in their setup. Well, in this particular video, I want to share with you 5 simple things that you can simply do to help you develop confidence in that your setup. Trust me, with these 5 simple things, provided you apply them based on how I'm going to share them with you accordingly, you will be able to develop that huge trust you need in your strategy, just like I do and every other trader out there does. Because when you don't trust in your strategy, you will always end up in the losing zone. So with that already said, hello guys, welcome to my channel and welcome to Forex Trade. On this channel, I mainly focus on how you and I can actually make money through crypto, forex, and stock trading. So anything that will help you make money in these industries, I make sure I share it right here on this channel. So if you don't want to miss out on great content like this and also some free trading signals, then you can join my Telegram channel, whose link will be down in the video description, and also sign up and also smash on that subscribe button, turn on the bell notification so that you don't get to miss out on my next video. So let's get straight into today's video. So the first thing you can actually do to help you develop trust and confidence in that strategy is simply backtesting it after learning it. So one big mistake I've seen a lot of traders, including myself, made whilst getting started is that once you learn something new about trading, once you learn a strategy, let me just take the word a strategy since it's what we are focusing on. Once you learn a new trading strategy, what we'll simply do is that we'll move on to the chart directly and start trading it without backtesting it to see where it works and where it doesn't work. The truth is that no matter the strategy you trade, it doesn't work at every given point. There are days whereby it will fail you, and there are days whereby it will work well. And there are some market conditions whereby it will work for you, and there are some market conditions whereby it won't work for you. So when it comes to developing trust or confidence in your trading strategy, the first thing I advise you to do is that backtest it. Go and get a backtesting to either use Go Charting or use TradingView. So if you are looking for a free platform that you can actually use, you can use Go Charting, and I already have a video on it that will be tagged in this video description. Or if you have the money to pay for TradingView, which will make it more easier for you, then you can also sign up for TradingView and they pay for their essential plan, which also gives the ability to backtest, and they use it to backtest your trading strategy. Because when you backtest your strategy, it helps give you the overview of every single thing you need to know about that strategy to make sure that you are not using it at the wrong place where it's not meant to be used. So whether you're trading trend lines, support and resistance, or you are trading one of those complicated strategies, the truth is that no matter how accurate that strategy is, it doesn't work at every market condition. It has rules that it follows, and when you go against these rules or doesn't consider the market conditions, it will actually lead you to more failure. And the only way you can identify this is when you backtest it and then making sure that you are also taking record of each backtesting. With all these data gathered, you'll be able to know that, okay, at this point in time, let me not use this strategy. At this point in time, let me use this strategy. So once you do this, you will easily identify the flaws of that strategy and know when to apply it. And when you apply it at the right time and see that the market isn't going your way also, you can simply know that, okay, it's normal. I apply the right strategy, just that maybe the market is a bit, maybe creating some pullbacks or something. So you'll be able to develop this confidence. Like if you trade my signals on my Telegram channel, when I drop signals on GBP, JPY, you often see that after the signal times, the market do have some pullbacks, but then I still tell you to keep holding on. And we've not lost any of them. Why? Simply because I know my strategy. I know the things that can come out when I place my trade. So when they happen, I'm already aware of it. So I'm still not moved by it. So that is the first point I have for you. Simply learn to backtest a strategy before applying it on the real market, as the old data you've backtested will give you more confidence to be able to control whatever thing you are seeing in the real market. So the second point here is simply trade that strategy in a demo account first before going to a real account. Now, the reason why you need to trade a demo account after backtesting is simply because with the demo account, you are not trading the new and real market conditions and not trading previous data. Because once you are backtesting with data that happened years ago. But with a real market condition, you are not trading the current situation of the market. You are not trading the current economic status of that particular market you are trading. So there's a little bit different from it, but then the strategy still have to be valid, because every good strategy that worked before still have a very high probability of working today, and it doesn't have to be complicated. So the point number 2 is that try and get a demo account and trade with demo account for at least maybe 2 2 to 3 months period of time, depending on how far you've gone in trading. If you are someone who is getting started totally, then like I would say you should get up to 3 months of trading demo account before moving to a real fund account. So that's simply it about the point number 2 here. In case you don't know how you can create a demo account, all you simply have to do is that sign up for a broker. Personally, I use SNES, so you can sign up for either of those brokers and then simply test your strategy over there. So personally, the one I promote in my YouTube videos is SNES. So you can, if you want to sign up for SNES, the link is available in this video description. You can sign up for SNES and then use SNES as your broker and then sign up for their demo account where they get to give you free $10,000. It's a free account that you cannot withdraw from, you cannot deposit real money into. You can simply use it to test your strategy in the real market and see how it goes. If it goes well, then you are becoming more confident in it because number one, it worked in the back testing. Now it's working with the real market data as well, so that will also give you a head on as well. So now let's move to the point number 3. Now the point number 3 is simply trading that strategy with a real account with your real funds, but not huge funds. So now here is the important. Whilst back testing, you were testing old data. Whilst demo trading, you were trading with free fund, which is not your money. And when it comes to trading, honestly speaking, the way you trade a demo account can never be the way you trade a real account. Because with the demo account, when you place a trade, you have it in mind that I don't really care what goes on. At the end of the day, I won't be losing my real money. So there's less emotions attached to it. But when it comes to trading the real market, it's totally different. There's more emotions over here in the real market than that of the demo. So whilst trading, I will always advise you that after you are done with your demo account, deposit a little amount of money in a real account and then also trade the same strategy with your real account, but with lower risks. The reason why I need to lower your risk whilst getting started is that, first of all, you need to help build your confidence. And if you start with a huge account, maybe you just woke up and then you deposited $5,000 or $10,000 into your trading account, and maybe you took a trade and then lose probably $500, like, you feel shaky because probably you are not used to those huge amount of losses before. And then once you lose such amount, you'll be a bit shaky. But in a scenario whereby you know that $500 is nothing to you, and then you deposited $500, $300, or $100 into your trading account, and then maybe you lose $5, $10, and below, you are not moved. Why? Because it's not any huge amount of money. What you are simply doing is that you are trying to develop that confidence to make sure that you can handle losses. Because when it comes to trading, I always tell people, as much as there's a higher percentage of you making profit, there's also a good percent that you are also going to make losses. So the best way to balance two of these things is being able to risk what you can afford to lose. And before this actually comes in, you need to first of all trust in your strategy. Because when you trust in your strategy, then you know that this risk worth it, this risk doesn't worth it, because you can't invest in something you don't have enough evidence on. So for example, if I tell you to come and invest in my strategy right now, if you haven't seen my tutorial videos or something, you wouldn't want to invest in it. Why? Because you don't have enough evidence of it. But then in a case whereby you've seen me trading live, and then you see my winning trade, my losing trade, and you compare, okay, the wins are always more, which means that there's a percentage of me making a decent amount of profit from my investment. So you sign up for it. This same thing applies to your own personal strategy. Please, I don't trade funds for people. Please, for those of you who might be thinking that I'm saying this to promote, I don't trade funds for people, please. So don't bother contacting me to trade your funds. If you need free signals, just join my Telegram channel and you are good to go. We are drop signals for 100% free. So that's simply it about the point number 3 here. Deposit a little funds into a real account and then use it to trade, and maybe trade it for a month or 2. And if you see that you are also going smoothly within that period of time, then good. You can now increase your account size a little bit. So one thing I always tell you is that always increase it, top it up a little, so that, because the more you top it up, the more your account becomes bigger, your losses also becomes bigger, and your wins also become bigger. With all of this, once you see that it keep going well, gradually you see that you get a lot of confidence and trust in your strategy, and you wouldn't have to bother again. And you can just be like me, like I can place trade and then go to bed. I don't care whatever thing that happen, provided that there's no news coming. I can leave my trade and then just work out. The only time I get worried about my trade is when there's a news coming, because no matter how good your strategy is, not when the news is against you, or if it's a high impact news, sorry about it, your stop loss is likely to be smashed. So that's simply it about this video. So now let's move over to the 4th and 5th point. So before we get there, please consider smashing on that subscribe button if you haven't, and also drop a comment, and also like this video please, so that YouTube will get to share this video to more people. So let's move over to the fourth point. So the fourth point is simply don't ever blame your strategy if it doesn't go well. Now, here's one thing a lot of traders do. When we get started with trading and we learn a strategy, we've backtested the strategy, gotten enough evidence. We've traded with a demo, then we've gotten enough evidence. But when we get into the real market and then we lose some few trades, we start blaming the strategy. Oh, it's not working. Oh, the broker manipulated my demo trade to let me trade money. Let me tell you one thing. The broker can't manipulate your demo trade. Even though it's a demo account that is hosted fully by them, they cannot manipulate what you do there. Whatever result you get there is simply the result of the exact market condition. And one thing you must understand is that was then and this is now. So when trading a real account and then you start losing trades, don't blame the strategy that it doesn't work. If you keep doing this, there's no way you're ever going to move to any good place. So whilst trading, one thing I advise you to do is that stick with that particular strategy you've learned and gotten enough evidence of. Keep trading it. Don't blame it. If it's not working, focus more on finding why is it not working instead of blaming it. Because when you start blaming something, putting blames on something, there's a 99% chance that thing is never going to improve in its life again. Because instead of you to focus more on identifying the errors and improving it, you will be more focused on trying to put all the blames on it and then not looking for any way to improve it. Let me tell you one thing. Like the way I trade, like me personally, giving you from my own experience, after every single trade I take, whether win or good, I'll go back to the chart and I try to see why I took the trade and I try to summarize everything about the trade. I don't just take my trade blindly. Whenever I take trade, I make sure that I can, like if someone sees the chart, I can be able to explain to someone what influenced my trade, what influenced my decision. And I need to make sure that whatever thing that influenced my decision, whenever I'm taking a similar trade, same thing should be able to influence it as well. So when I see these sort of things and then I keep doing it, and I see that the strategy has won me a lot of trade, both in demo and in real account, then there's no single reason for me to blame this strategy when it's failing. Because you need to understand that trading is not a 100% win-win game. There's never an holy grail strategy. If you like, go and learn smart money concepts, go and learn ICT, learn price action. There is no holy grail. Some people will tell you price support and resistance don't work. Some will tell you trend lines don't work. But the truth reality is that every single strategy in this forex industry works 100% and also fails 100%. The most important thing is that you are abiding by the rules of this trading strategy. So if you are trading support and resistance and then someone is telling you that support and resistance doesn't really work, let me tell you one thing. The market will always create resistance, the market will always create support. Without these two things, there's no way the market is going to move to any direction. So if you are trading support and resistance, just take your time. Like whatever strategy you are taking, this doesn't apply to support and resistance alone. Whatever strategy you are taking, you are trading, don't let someone tell you that it doesn't work. Provided that you've gotten an evidence of it that it works, focus on it and just follow its rules. That's simply all. Every single strategy out there that someone is teaching you on YouTube works, because if it doesn't work before, the person won't be able to show it to you. The person himself wouldn't know about it, because every single trader that you see on the internet right now in this few years talking about trading, including myself, every single thing we are sharing with you, we either learned it from books, we learned it from other pro traders, and then also try modifying it to fit our personality, so forth and so on. So every single strategy out there works. All totally depends on you who is learning the strategy and how you are implementing it. So that is the fourth one on our list. Now let's move over to the fifth point on our list. Now the fifth point is, don't be forced to quickly change your strategy. And this one big mistake I would say I personally did, that when I was starting trading, that made me lose confidence in some of the things I've learned before. Like when I started trading, I was trading from zone to zone. So I don't know if you know what I mean by trading from zone to zone, meaning I focus more when I'm trading. My main aim is that identifying support and resistance, supply and demand, and then identifying the trend line, a trend in the market, and then just trading them like that. I don't have all those my charts don't have all those crazy markup. I'm not saying crazy markup because their strategy is crazy, but I think it's sometimes some strategies are a bit too complicated. So instead of focusing on what I was doing, which is a normal support and resistance, a trend line that I've tested over and over again and gotten enough evidence of, I was like, because people keep saying that this strategy is best, smart money is best, ICT is best, liquidity sweep, change of character, like just trying to make the same thing complicated. I decided to abandon my strategy, since maybe it was too easy for me to understand, and I started following these complicated things. And one thing I always tell you is that once you have a strategy working, don't switch it because one look more advanced. Every single trading strategy is the same out there. Now let me break it down for you. Smart money concept believes in one thing, that they are trading with the banks. And where are the banks coming in? The banks are always in to buy a particular share of a product when it's at a fair price, right? Which is probably at a support area or a demand area. On the other hand, ICT concept traders have the idea that there's always liquidity left for the market to come pick up from a particular position in the market or other blocks or fair value gaps. And when you look at these areas, it's either a support area or a resistance area at the end of the day. Now, on the other hand, a price action trader only focuses on support and resistance or supply and demand, which is the same as these key levels. These people are giving different names. So at the end of the day, I will always tell you every single thing you see in the market is totally the same. The only thing that differentiates them is the name given to them and how people try to make it more complicated, making you think it's more advanced. So please, I'm not trying to compare any trading strategy here, but I'm just telling you that every single thing is the same. Look at other block in a market. You see that other block is at a key level where it was either a supply or support or resistance or demand or any of those zones. It's always the same thing. Like, I personally have watched a lot of ICT videos. Personally, I know a lot about ICT concept. I can teach you ICT concept. I can teach you smart money concept. But at the end of the day, I don't really see much different from them, and I see them to be way more complicated than price action itself. That's why I stick to my price action, which is more easier to follow. I identify my support and resistance, supply and demands, or any of the zones available. I look for the market trend and then trade in the direction of the trend, or look for a reversal pattern. If there's a reversal, then I trade the reversal. Pretty much that simple. So that already said, hello guys, hope you find this video helpful. As usual, don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section. So that already said, have a nice day. Bye.